Good morning, everybody. We've got a mixed trade in the grain markets early on Wednesday morning at 6:35 a.m. Central Time. December corn futures down 1 at 365. November soybeans up 5.5 at 997. They erased some overnight losses. December Chicago wheat down 1.5 at 536 3/4. December Kansas City wheat is down a quarter cent at 467 3/4. December spring wheat up 3/4 cent at 525. Nope ahead, its August crush report out yesterday, and it was kind of disappointing. Lowest soybean crush in 9 months. The number came in at 165.1 million bushels of soybeans that were crushed in August. That was below the 169.5 that was expected and below the 172.8 in August. Crush margins have declined amid this soybean rally, so that's a contributing factor, I'm sure. Soybean oil supplies also declined to a 9-month low. Domestic crush, of course, is expected to account for about half of total demand for U.S. soybeans this year. So we'd like to see a recovery there the next couple of months. Although if this price rally in beans continues, you could see the crush margins continue to soften or remain soft, and that could be an issue. We'll see another EIA ethanol report later this morning. Weekly production of ethanol has generally stagnated here. It's running 8 to 12% below last year's pace in a given week. We've been kind of sideways here for the last couple of months. Driving habits among Americans are just not where they need to be. This COVID thing has really been a big problem. It's estimated that we probably lost 500 or 600 million bushels worth of corn demand via ethanol in the old crop marketing year as a result of the virus. We may lose another 400 million plus, depending on how this marketing year shapes up. Winds and heavy rains have flattened a portion of the China corn crop. The latest Chinese government estimate suggests that production will fall by 10 million metric tons, or about 4%. So that's the equivalent of taking, say, 7 or 8 bushels off of the U.S. corn yield. That's a big deal. Corn futures on the Dalian Commodity Exchange in China trade their highest level since 2015. Interestingly enough, Chinese corn futures year to date are up 32%. Corn futures here in the U.S. are down 6% year to date. China's pig herd is up 31% in August versus the same period last year. So we've got a big recovery here following the African swine fever epidemic that really decimated the hog herd. That deal began back in 2018. China's pig herd had declined by as much as 41% by October of 2019, if you're to believe the government estimates. And some people believe that the declines were actually larger than that. This is a positive. The fact that they're growing again is a big positive for soybean demand, and I think we're seeing that now with all of these purchases. It's very interesting to me, the timeline here, when you look at African swine fever compared to the trade war. You could probably make the argument that the trade war and the course of the trade war would have looked a lot different if African swine fever was never an issue. I mean, China had greatly reduced demand for soybeans during this trade war period because of African swine fever. If African swine fever never happened, would China have been in the position to tariff U.S. beans or basically stop buying U.S. beans the way that they did? That's a question that we'll never really know the answer to, I don't think. China did buy more U.S. beans yesterday. This is pretty much a daily deal at this point. 132,000 metric tons. It's about 5 million bushels were reported. There were also some additional corn and soybean sales reported to unknown destinations, so aggressive Chinese buying continues. The majority of the United States will be dry for the next 2 weeks. A 7-day map is offering very little rain for the United States, barring the East Coast and the far southeast. The 6 to 10-day map offering odds of below normal rainfall and below normal temperatures. So in areas where the crops are mature enough, you'll see row crop harvest, I think, accelerate here. This could be good or bad for winter wheat planting, depending on the severity of the dryness, of course. Corn market itself, I mean, we had a down day yesterday, and we were able to shrug off some lows overnight. So I would still argue that we're in sort of an uptrending market. We're still kind of in bull market territory here, despite the fact that we're off of the highs by a little bit. Ethanol is still really a wet blanket here. If you had to go back and say we did 2020 over again, but COVID was never an issue, and it never happened, and that would certainly be much better than what actually happened. But say that was never an issue, I think you would have seen a more normal year in the corn market relative to what we had seen the last, say, 6 or 7 years. I mean, I think you probably would have seen December corn futures well above $4 at some point in time, given that little weather hiccup that we had in early July, or maybe you would have seen something in the spring. But I just can't tell you enough, or can't emphasize enough, how big of an impact this COVID issue and the ethanol issue had on the corn market. It's really unbelievable. Soybean market, again, closed lower yesterday, but shrugged off some lows overnight. More Chinese purchases. That continues to be a headline. Again, disappointing crush number. We hope that does not continue. We need this demand to continue, of course, if we want to see these higher prices continue. We got to keep an eye on the Brazil situation. Record crop. I wouldn't say it's probable, but it's very possible, depending on how weather shapes up. Fresh news in the wheat market kind of lacking. U.S. winter wheat plantings have begun. Spring wheat harvest is wrapping up. France cut its output forecast yesterday, so the market's been kind of sideways to a little bit lower. Cattle market was mixed yesterday. We traded both sides of unchanged. We saw some better gains in the feeder cattle market, but fat cattle kind of sideways, and we've now got the spot month October futures trading well above the cash market, which was mostly at 101 last week, I believe. Stock market's higher this morning. You've got a recovery there the last couple of days after what had been a fairly significant correction to the downside. The Dow Jones up about 115 points ahead of the cash open. The S&P's up 15. U.S. dollar is down 22 points early this morning. Crude oil is up 84 cents at 39.12. Gold and silver up just a little bit. If you would like some more information, go to my website, www.standardgrain.com. You can go to that website and click on Grain Marketing Plan. Check out my subscription service. It's $49 a month. For that $49 a month, you'll get my morning email. It goes out every day at 6:30 Central Time. You'll get my text message service, and you will be made aware of when and how and specifically I'm pricing corn, soybeans, and wheat throughout the year. It's broken down by crop year, by percentage. It's very specific. It's tracked every day. You don't need to be a futures or options trader to do it. If you're looking for something different, if you want to know what I'm doing on a daily basis, check that deal out. Again, no obligation. Cancel it at any time. Everyone have a wonderful day today. I will talk to you same time tomorrow.